Hey guys, Tam here from HomeSmart Encore. I wanted to take a minute and shoot a quick video about interest rates. Since I posted my last video about closing costs and down payment, I've been getting text messages, phone calls, Facebook messages. Everybody wanted to talk about interest rates. In fact, it was the hot topic of the day in my coaching call early this morning. So let's talk a little bit about interest rates. People are scared. People have seen interest rates take a little bit of a hike since the election, and people are starting to panic and saying, is it going to continue to rise? Are we going to see 6, 7, 8% interest rates? Is this it? Did it just shoot up a little bit and that's it? Is it going to drop back down? So I had some questions of my own as well. So I went and saw one of my very favorite lenders, Sydney Johnson, and I just picked her brain a little bit about what is going to be coming in the near future. And so we need to have two small separate conversations. We need to have a conversation about what this means to the individual buyer and what this means to the country, just us as American people. So let's talk about what it means as a whole to the country. So from what I gathered from Sydney, she's been doing loans over 32 years, so she's got a really, really great view on the market. What she was saying was that these low rates that we've been seeing are really unheard of, and for us to have had them for so long is just not sustainable over the long term for our economy. So what she was saying was a small increase in interest rates over the long term, as long as it is matched by an increase in home values, it's sustainable and it's actually good for our economy. She's thinking that we're going to see interest rates possibly right around 5% over the next year or so. Now, obviously, she doesn't have a crystal ball. Nobody does. Nobody can really determine what it's going to be, but she seems to think that interest rates are not going to go down. So let's talk about what this means to the individual buyer. What this means to the individual buyer is, if you are thinking about buying a home, you need to get really, really serious right now. So when I met with Sydney, we looked at a loan that we just closed recently. We just closed this loan a couple months ago as an FHA loan at 3.25%. So we plugged in all the same exact numbers at today's interest rate, and it equaled an increase in the payment of $300. So, I mean, $300 may or may not seem like a lot to you, but a $300 increase in a payment might actually price somebody out of a home. So once again, what this means to the buyer is that we need to get really, really serious if you're thinking about buying a home. And what I mean by getting really, really serious is stop spending all your money. Stop going out and buying things that you don't need. Don't go buy a new car. Don't go buy a new motorcycle. Don't go buy a new seater. Don't go buy a new trailer to drag your toys around. Get really, really serious and start focusing on decreasing your monthly revolving debt. That is the best thing that's going to help you to be able to qualify for as much house as you can possibly qualify for. So anyways, I hope this video helped out a little bit with some of the questions that I was getting. Feel free to text me, call me, send me a Facebook Messenger, and hopefully I can answer any other questions that you might have. Thanks.